Our next guest on the program are a father and daughter. Joining me next is Eric Sprott. He's chairman of Sprott, Inc., and Larissa Sprott, who's president of Sprott Money. And Eric, I wanted to have you on the program since last time you and I talked was at Casey Research back in October. Of course, at that time, you guys were launching your silver ETF, and you were very bullish on silver. So let's begin with the silver story. What are you seeing in silver that makes you as bullish as you are today?
Good day, Jim. Obviously, those people who are close to the silver market realize that lots of interesting things are happening. But the thing that I fall back on most is what people and investors are doing with their money in silver. And we use various proxies to see what kind of levels of interest there are. And the most recent proxy we have is the silver and gold sales from the U.S. Mint for January. And the sales of silver coins versus gold eagles were on a par in terms of dollars. And I can't overemphasize the fact that it's dollars that people are putting in equal amounts into silver and gold. And the reason I go to the dollars is the price of silver versus the price of gold is a ratio of 45 to 1, where the price of gold is 45 times higher than the price of silver. And the availability of gold in terms of dollars versus silver is about a ratio of 86 times more gold available than silver. And all I can suggest to your listeners is that if people keep putting their money in a 1-to-1 ratio, there's no way that these prices can maintain that kind of relationship because there's just not the availability of it. And it's not just, the U.S. Mint data. We use data such as when we did our physical Silver Trust IPO, we raised $575 million. When we did our Gold Trust IPO, the first tranche, we raised $440. So we saw more buying of silver than we saw in gold. I know that a company called Gold Money, and I'm sure you're very familiar with James Turk. He sells gold and silver online. And his most recent data is that he's selling as much silver in dollars as he's selling in gold. So all I can suggest is that the data tells me that there's a huge interest in silver here. It can't possibly be sated. So I think, and I have believed that the ratio of gold to silver will go from 45 to 1 where it is today back to the historical ratio of 16 to 1, which would mean that silver would outperform gold on about a 3 to 1 ratio going forward. I don't know what the time period is, but I'd say it's 3 to 5 years. And even while I'm saying that, it's not that I'm negative on gold. That's the furthest thing from my mind. I think gold's going to do well yet again this year, but I think silver is the place to be right now.
And Larissa, from a retail investor point of view, what are you seeing? Is what you're seeing from your customers confirming that trend? And if it is, what are they buying? Are they buying, let's say, sovereigns? Are they buying silver rounds? Are they buying bars? What are you seeing?
Right now, our clients are buying silver, and more silver. Anything they can get their hands on. What we specifically sell is silver coins and bars from, say, the U.S. Mint or the Royal Canadian Mint. And basically everything that we have up on our website is currently being bought by these clients. We're seeing incredible demand.
Larissa, have you had any difficulty procuring silver for your customers?
No. Actually, we're quite lucky in that our business model is set up to, as soon as we sell, we buy back right away, and we've got some great wholesalers down in the States and in Canada, so we're not having any difficulty right now procuring the silver, but we do have a different, I guess you could say a different business model than most companies in that we won't sell it unless it is in stock.
And Larissa, one thing that, I've been buying silver since 2002, and there was one period of time, and this was in the fall of 2008, where I bought quite a bit of silver. I could lock in the price, but it took me at least 3 months to get delivery. So are there any bottlenecks in the silver market, let's say either in sovereign coins or let's say in 100-ounce bars? Are you seeing any bottlenecks in terms of the product availability?
Yeah, I've been hearing about it. I mean, I talk to my wholesalers every day, and I've got the pulse on the system here, but I'm hearing about backups from anywhere from 2 weeks to a month. But like I said, in our business model, we have a large inventory, and we just won't sell it if we don't have it in stock. But absolutely, I am hearing that there are bottlenecks out there. You know, it's getting more and more difficult to get in some of these Johnson Matthey bars. Even some of the mint shipments are delayed by 2 weeks, 3 weeks. So we're seeing it, but we do have lots of inventory, and we keep a tight control on that.
And in terms of you hearing these stories, but with your business model, you don't sell it unless you have it, as opposed to, let's say, 2008, when we had those bottlenecks, especially in the coin sector, you could lock in a price, but you would have to wait a long time to get it. But at least from your business model, if, let's say, I called you up today and I wanted to buy, 100-ounce bars, you would not have trouble delivering those bars, or I could get those from you.
That's correct. I mean, as soon as your payment clears, we try to ship within 48 hours of the payment clearing. And like I said before, we do keep that in stock. We won't offer it unless it's in stock.
And Jim, I might add that as one of our principles is we have owned a lot of gold and silver here, and we always try to stay in front of the game because we're aware that there's likely to be shortages, and we are always a little proactive in terms of making sure that we have some inventory because we have a pretty good sense for the market. And I might also add that, as you've undoubtedly read, we did have huge trouble trying to get silver for our silver trust because we committed to buy in late October, and it took us till almost the middle of January to get delivery. And one of the things I can share with your listeners is I had one of my partners go down and check the bars, and the one thing I wanted to know is, well, when were these bars produced? Interestingly, I found that some of them were produced after we'd made the purchase. So in other words, the bars weren't in inventory. They were about to be produced and were bought forward. So obviously there's not a lot of inventory sitting around. Otherwise, we would have received delivery much sooner.
You know, Eric, one thing that we've seen in the last 10 years, and a lot of this comes from your country, we've seen a lot of exploration in the silver space. There are a lot more silver producers today producing silver than there was 10 years ago. In terms of overall silver supply, from a larger picture, where do you see that going in the next couple of years? Do you see more supply coming online? Or, given the fact that we could see more supply, you could see a situation based on what you've been describing and what Larissa has been saying, investors basically take up that supply?
Well, Jim, you know, the silver supply increases anywhere from sort of 3 to 6% a year. And the total mine supply is a little less than 800 million ounces a year. When you look at the kinds of sales levels we're seeing, for example, I'll use the U.S. monthly sales of silver in January, 6.4 million ounces. I mean, that's almost 80 million ounces a year of an 800 million ounce supply. And if they averaged out at 80 million a year, that'd be up from 42 million last year, which means the coin collectors in the U.S. have to buy 5% more of the supply for the whole year, just U.S. buyers, and production might only go up 5%, so there doesn't let any room for anyone else to buy any. And on another macro, we've seen data recently where the Chinese have imported, I think last year was 112 million ounces, and in 2005, they were exporters of 100 million ounces. So you have this 212 million ounce swing in an 800 million ounce market, and it's hard to imagine that everyone will get all the silver they want. There's lots of data out there that suggests someday we're going to hit a shortage, and I'm kind of waiting for the day when somebody who's in the manufacturing area basically says, I can't get my production. Now, we haven't seen that yet, but I suspect that will happen soon.
Now, one thing that has always been a source of supply in the past has been scrap silver, mainly from photography, but as we've seen digital photography replace the old haloid type photography, there's less of that coming on board, and then we're also seeing new applications for silver. You know, a lot of the services that track, let's say, supply and demand in the gold sector, they look at industrial use, they look at jewelry, photography, all the various industrial uses of silver, and they sort of, Eric, back into that number of what we call investment demand. It's almost, in a sense, a plug number.
Right.
Yeah, so what about scrap, and what about, is any of the silver that's available in the ETFs a source of future supply, in your opinion?
Right. Well, Jim, the scrap's a very, very difficult number to know, and you're absolutely right. When we look at the standard data that the silver and gold producers are given, and typically by GFMS, the net investment demand's a plug number. I mean, I've been on record as saying there's years that they say demand was whatever, and I said, well, my goodness, we bought more than that at Sprott Asset Management, so I know the number's wrong. And we did a recent report that suggested in the last decade that we identified, I think it was either 6 or 7 buyers, which would include the various ETFs, ourselves, and Gold Money, and a few other people like that. And we came up with 589 million ounces of investment, whereas GFMS, I think, came up with something like 250. So we know the numbers are wrong on investment, and obviously we didn't totally cover the world here. So I think that one can't really rely on that data, and I've always said when I suggest that people buy silver that it's really because of investment reasons that I think the price of silver is going up. But even I was very shocked to find out that an estimate of industrial use was put out for last year, which showed that industrial use was up 18%. Well, if 50% of the silver is used for industrial is up 18%, that would suggest that that just caused an overall increase of 9% in demand, and we don't have that supply available because it only went up about 4 or 5% last year. And that's notwithstanding the increased silver buying by investors. So we're fast approaching the day that most people in the silver industry have anticipated where all the inventory is gone, and it will be very difficult to participate in the market. And when you were asking Larissa earlier about, other people experiencing problems, I mean, it's been well noted that some of the big sellers very often post on their websites that they're sold out. So there's no question there's a tightness in the system.
In terms of what that might mean in terms of a price spike, and then also what it might mean in terms of relation to what happens on the COMEX. For example, in 2008, there was definitely a bottleneck in the coin market, and you could lock in a price, but you were going to have to wait. In my case, I had to wait 3 months to get the stuff.
Right.
But if I was, let's say, going to the COMEX, I could get 1,000-ounce bars. Could you see a time, if this particular tipping point is reached in the silver market, where investors are shut out of the market on the COMEX? In other words, the government steps in and says, look, you've got to be a legitimate commercial user of silver in order to participate in the market. And if that would be the case, what would then happen to silver?
Yeah. Well, Jim, as you know, I mean, there's a lot of discussion going around the March COMEX contract in silver. There is outstanding contracts of 300 million ounces. The dealers have just a little over 40 million ounces. There's some thought that a lot of people will stand for delivery, which means delivery cannot be facilitated here. What people might do about that, I have no idea. Obviously, as a citizen, I think it's more important that the manufacturers get it than the investors get it. But by the same token, I think the price should adjust that, because price tends to balance off supply and demand, and lots of people, including myself, believe the price of silver has been manipulated, and that its value should probably be 16 to 1, and at 16 to 1, doing some simple math, if, for example, if gold was $1,600, would suggest a $100 silver price. So we're a far distance from that. I don't know if there's going to be a COMEX failure. I mean, I look at COMEX that trades 400 and 500 million ounces a day against an annual market of 800 million. And I think, well, that's a bit of a joke because it's just people pressing buttons, obviously. It can't be people literally using silver. It's just people trading silver. So I think the day of the physical reckoning may be upon us. It'll be quite exciting to watch it. And that's why I've always encouraged people to own it now and don't wait around to find out that there truly is a shortage.
Larissa, let me go back to you, and this is just something I see economically. As I look at my Bloomberg screen today, we've got gold in the neighborhood of about $13.60, and we've got silver around $30. You know, if you just take the average person that wants to get into the precious metals market, there's not a lot of people that have enough money to go out and buy, let's say, a 1 ounce eagle or 1 ounce maple leaf. How much of this is what, in terms of what you're seeing at the retail level, is coming from people that want to get in the space and they're saying, well, $1,400, that's a lot of money. But you know what? If I've got a couple $100, you know what? I can buy a lot more silver for my money. How much of this is just economics based on the ability to purchase?
That's a really good question. I'm not really 100% sure. I think right now silver is definitely a little bit more mainstream in the media. I think that might be driving sales. We've certainly written a lot about it in our Markets at a Glance. And I think, like I said before, it's just becoming a little bit more mainstream, and it's definitely more economical. So that's where the trend is heading these days.
And in terms of the products of silver, we have silver rounds, you have the bars, you have the sovereign coins, and you even have what is called junk silver. As you look at the silver market, where do you see the best value in terms of the products that are available for investors?
Well, we try to keep our premiums competitive with everybody. Right now, we're trading anywhere from 9 to 11% over spot, so it could be anything from buying an Eagle or a Royal Canadian Mint coin. I think it really just depends on what the client wants, what the actual investor wants. Do they want a bar? Do they want a coin? It just really depends on what their appetite is.
We sell various varieties. We sell lots of 100-ounce bars. Of course, we own a lot of 1,000-ounce bars. We don't get a lot of traffic in that area. But the bars are probably amongst the most popular items we sell.
And Eric, as you take a look at this, I think somebody asked you this question at the Casey Research Conference, and I think somebody asked you, why don't you set up, let's say, a silver stock fund where you go out and buy the producers? And you want to comment on that? In other words, why did you go first to the physical and not look at the equity space?
Yeah. Well, Jim, it's a great question. And, it's very we're a bit of an interesting study on silver because we got very excited by silver, a long time ago, but particularly in the beginning of Ken, I said, we got to get into silver because I can sense that the price is going up. And I can tell you, just from Sprott Asset Management point of view, we had a very difficult time getting positioned in silver stocks. Just within let's say the $8 billion that we run, we had a tough time. So I can't imagine everyone trying to get in because it would just be impossible. And, we see every silver company in the world around here, and I typically don't like buying the big market cap companies. I like to buy smaller companies because the stocks are typically less expensive on a valuation basis. But it's not easy to get in. So the first thing we had to take care of was our existing clients. We have given some thought to creating some kind of a silver mutual fund up here that might only own silver companies. We haven't brought out that product yet, but it's something that definitely has been under discussion. We've also discussed for Canadian accounts having sort of a product that might be available to own silver that would be an RSP eligible. We have a fund like that now up here, but we haven't started it yet because we've been very busy with lots of things up here. But those are definitely on our radar screen.
Let's talk about the Sprott Silver Trust, and you did something that was a little bit different. In other words, if I own shares in Sprott Silver Trust, talk about the aspect of delivery.
Sure. Well, Jim, I've always been a believer that when you own silver, you have to have access to it. I'm not a believer in paper products that suggest you own silver. So we wanted to go one step better than the SLB and one step better than the GLD. And those ones don't let you get access to the silver and or gold. And we truly want people to have access to it because it's this type of thing that in a difficult situation, people want to know they can to get the precious metals. So that's why we have a situation in each fund that at certain levels of investment, they can be converted into the physical products. And it's a key part of those funds. And that's why they trade at a premium to the spot price. That and the tax benefit to an American resident of owning our funds versus the ETFs, because the ETFs are taxed as collectibles and ours is taxed as a common equity in that sense. So there's a good reason they have the premiums they have.
Correct me if I'm wrong, Eric, but as I recall, wasn't there in the 90s some fund out there that owned primarily silver stocks?
Jim, you're testing my memory. I don't remember it. There might very well have been a company like that. I just don't recall it. So, and I'm sort of surprised that somebody hasn't started one yet. And if anyone should start one, I would presume it should be us.
And another thing that I find rather interesting in the silver space, and I'd like to get your comments on this, Eric, is it seems everybody's trying to get to become a 10 million ounce producer. The guys that are getting close to 10 to someday would like to be a 20 million ounce producer like Pan American. But you've also seen, as a result of all the exploration, there are a bunch of companies in Mexico where you have a bunch of companies in very similar neighborhoods that are producing 2 million, 2.5, 3 million. Why somebody is not come along, a Carl Icahn type person in the resource space and consolidated that, because it would seem like the economies of scale, you could take all these small companies and turn them into a larger company. I mean, do we need a whole bunch of 2 million ounce producers versus, let's say, something with a little bit more heft in the 15, 20, 30 million? Why do you think we haven't seen that?
Yeah. Well, it's a great question, Jim, and I kind of reflect on that even looking at the gold industry. When you think that the gold price has gone from $260 to $1,400, why weren't there more mergers in the area? And I really don't know the answer to that, because in a way, I mean, we're almost like a consolidator, because we go out and we own 100 different companies, except, we don't put them in a public vehicle. But I think that the reason that most companies don't do it is because they're not students of the precious metals. They are miners, and they don't believe that the price is going higher. I mean, if you would have said to a guy in 2004, when the price was $350, that it's going to be $1,400 in 2010, you think you should go buy something? Well, of course, his answer would, yeah, I'll buy everything around. But I think most of those producers are really, because they're not students of the silver price and the gold price, they don't believe the prices, and therefore they don't make the move. And their own models are always at some discount to whatever the price is today. That's where they're going to make their acquisitions, and therefore they don't make them. And I can tell you that as we were buying silver stocks last year, almost every stock we bought went up 200 to 400% last year. So any producer who would have come along and made a takeover bid would be sitting pretty today, but I don't think they imagine the price of silver going to $30, and I don't think they imagine the price of silver going to $50, which is what we imagine happening.
It's interesting as I contrast in the natural resource space, when you look at energy companies, natural gas bottoms, and you have Exxon go out and buy XTO. You don't see that as much in the mining space, and I think it goes back to what you just said, Eric, is that these guys are miners. They're not macro thinkers. We just had this very discussion in a meeting today with a company, and that is, if you're focusing on, getting the drill bit, exploring a piece of property, what are you going to do? Your pre-feasibility, the metallurgy. You're not thinking of what's going on when the CBO announces that the budget deficit's going to be $1.5 trillion, or for that matter, Ben Bernanke goes before a congressional committee and says he's really not printing money.
Right. And I think that's the big thing, that if people would stand back and realize what's happening in the system, and you look at all the money printing, you're looking at all the bailing out of the banks, and to me, we'll know when precious metals hit the gold mainstream, and that will be when people say, I want to get my money out of the bank, I need it to be somewhere else. Well, we're not there yet. But we've had two instances this week, one in Denmark where a bank went broke and some of the depositors are going to lose money. And now we have this situation in Ireland where they said, hold it now, we put all this money in, but the bondholders and maybe some of the depositors should have taken a loss. And the minute depositors realize there's some risk of being in the banking, but having a deposit at a bank, and where do I put my money? That's the time when gold and silver will really put on their major move.
A final question, as in any kind of scenario where you can look at the fundamentals and the fundamentals tell you, boy, this is going to happen, I can see this happening someday. What would be a nightmare scenario or something that would cause you to change your mind? For example, out of the blue, 2008, where I don't think people realized how close the world was to coming to an abyss. If there's a nightmarish scenario out there in the future or something that you would worry about, Eric, what would that be?
Well, I think I've sort of thought there might be three reasons why I might change my mind on precious metals. One is that you get into some, wild and crazy mania in gold and silver, which, the toughest part of that is to figure, well, when do you get out, okay? But I don't think we're in any wild mania time. In fact, we are going to write an article on the supposed gold bubble, precious metal bubble, which will totally debunk this thought that everyone's pouring their money into metals, because they aren't, and we have the data to prove it. So we haven't hit that mania stage. That would be one reason you might have to change your mind. The other reason would be if governments and central banks started acting responsibly. And luckily for us precious metal owners, there's very little sign of that. So we don't need to worry about that yet. There's been very few governments who seem to really want to deal with the issue at hand. And quite frankly, when they deal with the issue at hand, of course, their economy tanks. And that's why, most of the developed world doesn't want to deal with the issue. And I guess, the easiest one of all would be if the world decided that gold and silver would be the currency. And then, of course, we wouldn't have to own gold and silver because the currency would be the equivalent of that. Now, we haven't got there yet, but I wouldn't be surprised that in the next 5 to 10 years that might be the solution that we all might have to ultimately come to.
Given the fact of all the fundamentals that you're looking at, what you're seeing, Larissa, both at the retail level, last year was a phenomenal year for silver. We were heavily involved in silver. As you mentioned, Eric, a lot of these silver producers, even the small guys, were up 100, 200%. It was a phenomenal year for silver. If you were to take out your crystal ball and say you and I were having this conversation December 31st of this year, what heights could you see the price of silver going to if you just had to take a guess?
Well, I've definitely been reading what some of the other experts have been saying, and I know what we say here at Sprott. I mean, we envision silver going to $50 and beyond.
And Jim, I might add, I'm pretty convinced that we're going to get back to the 16-to-1 ratio. In fact, I think we'll get lower than 16-to-1 because we'll probably overreact. And not that I'm predicting it this year, but I think silver will ultimately end up trading over $100. And this year, certainly something between 50 and that price is, I think, a reasonable target based on all the dots that we're connecting here that tell us about the difference between supply and demand. So I think it's going to be a pretty spectacular year all around. None of the data would suggest that we're barking up the wrong tree here. In fact, the data keeps reinforcing the optimism. So we get more excited by the day.
And finally, Eric, I'm going to pretend that you're not listening to this conversation. Larissa, I have a business. I have 3 sons in the business. What's it like working in the business with your father? Eric, you're not on the phone conversation. So,
well, it's been a valuable learning experience for me. I've grown up living, breathing, and eating the market. That was our conversation at the dinner table when I was growing up. I started in this business 15 years ago as a summer student and worked my way up. And, having my father as a mentor is great. It's invaluable. He gives me the independence to run Sprott Money, but he's also a good source to go to for knowledge and advice.
All right. Well, listen, as we close, Eric and Larissa, if our listeners would like to find out more about Sprott, the funds that you manage, your ETF, or Larissa Sprott Money, tell them how they could do so, please.
Sure. Well, the funds, if you want to learn more about the funds, that's Sprott.com. And if you're interested in Sprott Money, it's SprottMoney.com. Or you can call us toll-free at 1-888-861-0775.
All right. We've been speaking with Eric Sprott. He's chairman of Sprott, Inc., and Larissa Sprott, president of Sprott Money. Eric and Larissa, I'd like to thank you for joining us on the program. All the best to you.
Thank you.
Jim, it was our pleasure. All the best to you, too.
You're listening to the Financial Sense News Hour at Financial